Welcome to the Invest for More Real Estate Podcast. My name is Mark Ferguson, and I am your host. I'm a house flipper. I flip 10 to 15 houses a year. I own 13 rental properties with a goal to buy 100 by 2023. I'm also a real estate agent. I've been licensed since '01. I run a team of 9. We sell close to 200 houses a year. So on this show, we like to interview house flippers, landlords, and the best real estate agents in the business. So stay tuned for some great shows. If you want more information on my rentals, on the numbers, how I buy properties, check out investformore.com. Hi, everyone. It's Mark Ferguson with Invest for More. Welcome to another podcast on real estate and real estate investing. Today, I'm super excited to have this guest on the show, Ben Leybovich, who is an awesome real estate investor, also has a great website, tons of information for people looking to start investing at justaskbenwhy.com. So we're going to talk about a number of things today with Ben on investing, where he's located, what he's currently doing, and even a little bit about being a real estate agent. He has a different philosophy about me on that subject. So, Ben, I'd like to thank you for joining the show. How's it going?
It's my pleasure. Thank you for having me on, Mark. We've known each other for quite a while, here, there, and everywhere. It's a pleasure to be speaking to you like this.
Oh, yep, same here. Yeah, and for those who don't know, I started my blog a little over 2 years ago, and one of the first people I met on the online investing space was Ben. So he'd been doing a website for a while, huge presence on Bigger Pockets. And Ben really helped me out learning the space, kind of figuring out what it's all about. And he's been a great help to me. And it's been kind of fun talking to each other over the years, evolving and seeing where we could take our sites and investing as well. So, Ben, first question I have for you, you've got a very interesting history as far as how you got into real estate, about what you grew up wanting to do. Why don't you tell our listeners exactly how you got started in real estate and why that came about?
I'll make it quick, Mark, because I think it's pretty well known. It's right there on my website, and people can read about it. But I'm a violinist by training. I was trained as a violin player. I went to University of Cincinnati, College Conservatory of Music, which I don't know how it ranks now, but it was a top 5 at the time. And I would imagine it still is. It's a great school. But the thing that happened to me was I was diagnosed with multiple sclerosis when I was in the first year of my master's degree program there at Cincinnati. My body kind of went a little crazy on me, and one thing led to another. Some MRI images showed some lesions on the brain, this and that and the other. They couldn't confirm it. They called it probable multiple sclerosis because some of the signs and symptoms were there, others were not. But, doctors, they like to cover their ass. And so they gave me this diagnosis, and they basically said, hey, we don't want you to freak out, but you could be in a wheelchair in 2 years. I'm a violinist. Violin, any music, but violin in specific is a function of fine motor skills. You got to use your hands in very finite fashion. And so put yourself in that circumstance. You're being told, hey, dude, you may not be able to use your extremities. You may not be able to walk. You may not be able to use your hands. And here I am. I played violins at the age of 5 or maybe 4. It's a long time ago. I can't remember exactly. But, you're being told you're stupid if you still want to go for this, because if you want to make some money, you may not be able to. It's not a function of how good or bad you are. It's a function of it's taken out of your hands, essentially. So, I'm not going to go into the symptoms, the physiological symptoms I felt at the time, but it wasn't a far stretch for me to believe the doctors that, there'll be a time that I won't be able to perform. Well, one thing led to another, and obviously, if you can't move, you can't work. If you can't work, you can't make money. So that got me started doing research and thinking and reading books and talking to other people. And I eventually arrived at real estate as I thought, and now I know, the most logical and the most reasonable and the most probable way for somebody to achieve financial success while starting with nothing or close to nothing, and doing it in ways that have a chance at some kind of quote unquote passivity. I am absolutely huge proponent of working less and making more money. I don't mind working 24/7 with my head, and I do. I just can't live any other way. But I make it a point. I don't care how much it costs me to outsource. I make it a point to try not to rely on income that I have to generate with effort, because I know that effort can be taken away from you. It can be taken away from you at a snap. And I have very personal knowledge of this. This isn't, I read this in the book. This is just what I know in my life to be true. And so I don't want to get comfortable with a house payment that I have to do a W-2 work for or a 1099 work for. I don't want to get too comfortable with car payments that I must make. As long as somebody else is paying for it, I'm cool with it. But if I'm the one paying for it, I'd rather not have it. So I do have a reserved, nice enough, but reserved lifestyle. I don't overspend. I could afford a lot more than what I do because of that kind of line of thinking. I want to spend a very low percentage of my pay, and I want to focus on spending the passive income as opposed to the earned income. I also have some earned income, but my purpose in life is to get away from it, to replace it with passive income, or at least income that maybe not completely passive, but could be systematized to where I become a function of manager over and above the system, as opposed to being plugged in to that system and having to do the work. I just can't. I think it's risky.
Right. Well, what you're basically saying is you want to be a businessman who owns the business, has people who are working for you, or the business works for itself, where you can take vacations, spend time with your family. You're not the one who has to work 40 hours a week or else you don't get paid.
Well, not only that, Mark, but you and I know that there's only 24 hours in a day for all of us. And even if you did work 40 hours a week, okay, so you can make a lot of money if you're also smart about how you work. But the bottom line is that you can't jump over that hurdle. Whatever that hurdle is, it is what it is. And it's 24 hours in a day. And let's say you're totally healthy for the rest of your life. Let's just say that. Complete bullshit. Nobody ever is. But let's just say you're completely healthy for the rest of the year. You'll still have limitations. So the only way to grow beyond those kind of organic limitations is to leverage other people, leverage systems. And everybody I've ever done business with makes money on me. Why shouldn't they? Of course they should. If I'm making money, so should everybody else. But the point is, I'm not trying to do it all myself. I think it's risky. I don't think it's reasonable. Like I used to think for a period of time that I would start a management company, manage my own rentals, and manage everybody else's rentals. And then I said, what the hell am I doing? Why would I want that life? Managing that many that's why the only thing I'm interested in nowadays is syndication, because guess what? Those projects are big enough so that you can have payroll as part of operating expenses in the project. That way, I am systematizing the management process. Okay.
Right.
That's why I don't like smaller projects anymore. That's why I wouldn't buy another fourplex. Why? Just more work for me. I don't want more work.
Yeah. Well, it's funny because I'm up to 9 people on my team now. Mm-hmm. So I've got 6 licensed agents, and it is so nice not to have to sell all the houses myself, not to have to do all the income producing myself. My other agents do it. Kind of what I make is a bonus. And I also just hired a new contractor full time, and he's managing all my rehab projects for my rentals and for my flips, because that was driving me crazy. I was taking 6 months to get a rehab job done, mostly because it's my fault, because I wasn't managing them right. I wasn't keeping on top of it. And so, but yeah, if you can use people in whatever place in your business to leverage your time, it'll make you more money. It'll make you happier. It's just a beautiful thing once you get that idea down and you implement it. So, yep, that's awesome. So tell me, how did you buy your first piece of real estate? How did that all come about?
Well, when this happened in college, I started studying and I started talking to people, and I pretty quickly realized that, look, my capacity to enter the game has a lot to do with having or not having cash. And, buying certain asset classes, you can't avoid needing cash. And real estate, I discovered that having money is good. It's helpful. It's a bonus. It makes things easier. It opens up the playing field. It does a lot of good things. However, not having it is not necessarily admittance of defeat. You can still do some things by having knowledge, which is the only thing that is more powerful and more valuable than money in this game. Well, my first purchase was a flip. I actually found a house. It was literally taken apart. It was a nice brick ranch, and I figured I placed it $80,000-$90,000 after rehab value. But it was a nice part of town. It was, good location. So I called a friend of mine who happens to be a CPA or controller for a company. And I said, look, I set up a line of credit. And I said, I can't handle both the purchase and the rehab. So you purchase the thing. I'll give you a mortgage. We'll turn it around. I'll pay you when I sell it, He came back to me and said, listen, how about I buy you out? Here's a chunk of money. I want this thing for a rental. Well, interestingly, in the end, he ended up not keeping it as a rental, but sold it for about $90,000, which is where I estimated the after repair value to be. So it was a wholesale deal, double closing kind of thing. But I don't practice wholesaling as a business model. I don't like it as a business model. Talk about not passive. Shoosh. Dude, talk about not passive. I mean, finding deals, prospecting, but oh my God, I see all these newbies. I want to start with wholesaling, and I just pull my hair out. What part of wholesaling do you think is easy? It's probably the most sophisticated way to make money in real estate, aside for syndication and big money, SEC kind of money. But that was my first deal. And then I bought a house that lost me $20,000 because it was a rehab that was completely over my head. I knew nothing about real estate. I couldn't tell a rafter from a footer if you put a gun to my head. And I did this rehab. It had like some kind of stupid 40 windows or 35 windows or something. I mean, figure it out. At $325 an opening per window, that right there, 10 grand, and the thing needed everything. It needed everything, right? So I did what a newbie does, I put the numbers on paper and it seemed to make sense. The only thing that I forgot is that I knew nothing, and I forgot to discount for that. And so I was had by a bad contractor, and I had to go back and redo the work again. And that first contractor cost me $20,000. That's the first two deals. And after that experience, that was a very formative experience for me, Mark, because I decided, look, if I'm going to be buying, and the thing with this one, the reason I was able to live through that experience, and back then, $20,000 might have just been $1 million, because back then, $20,000 was like, wow. So I lived through it because of my propensity for finance. I found myself being able to finance myself out, get the investor out, get the principal and interest out, and then I put the house on the market. And in the end, I finally sold it. But this was just when the market was beginning to crash in 2008, 2007, sometime late in 2007. Okay. So that's when I decided, done. I'm done. I'm not flipping. Because, when you do flips for a $20,000 margin, that $20,000 margin will go up in smoke in about 3 seconds, and in my area, that's what the margin is if you're lucky. And most of the time it's 10 or 15. I'm just not interested in that kind of risk. If I was in the marketplace where you could flip and make $70,000, $80,000 margin, then even if you do everything wrong, you're still likely going to make some money on a flip. And if that was the case, I'd be doing it. Although it's not passive, but I'd be doing it because that kind of capital gains, you just do it, But for $20,000, nah, you couldn't get a crane to lift me on a $20,000 flip. You couldn't pay me enough money. You couldn't give me $20,000 right now to do a $20,000 flip because I'd lose 40 on it. I mean, it's Ohio, it blows my mind what people talk about doing in Ohio. It's ridiculous to me. My experience doesn't mesh with what I hear people talk about. But that's how it started, and that's what led me to income producing real estate, besides the fact that I figured out I can finance it 100% and be done with it and benefit from the cash flow. And once in a while you have to manage some tenants, but by and large, man, you want to know heartache? Go flip some houses. Dude, I'm just not interested in that life, man. I respect you for doing it. Serge, my good friend, Serge Shukat, Brian, I don't get it. I wouldn't do it.
Yeah, you've got to have the margins. You're right. If I had $20,000 margins in my flips, I wouldn't do it either.
Yeah.
But I think we average 32,000 profit per deal we do. And and your projected profit is always more than that, like you said.
Sure.
You figure you're going to make 35 or 40, and then you just assume 5,000 is out the window because repairs will cost more. And you assume 5,000 and something else will happen with delays or some kind of contract issue. So it's, like you said, that money can disappear very fast. I mean,
and then the pain and anguish, what is that worth? The process of dealing with contractors and bullshit. I don't know how else to put it, man. There's so much of it in this process. A lot of it probably has to do with, look at the quality of people you're dealing with a lot. Handy people, contractors, I hate to say it, but it's true. You wouldn't be friends with these guys. You wouldn't invite them in your home. You wouldn't let them play with your kids. So the way people think and the way people make decisions, like I've been with the same contractor now. Once I found them, I've been with them for 7 years. I don't nickel to dime them. I give them the key. I have an HVAC guy. I have an electricity guy. I have a plumber guy. It's the same crew, the same people that I've been dealing with for 6 years. Once I found them, I hold on to them. I don't nickel and dime them. I just know that I can hand them the key, that they're going to take care of the issue. They're going to return the key. They're going to submit a bill. They're not going to ask me for money up front because they can't afford to buy supplies. None of that stuff. You know what I'm talking about. None of that stuff. I'm dealing with professional people. Now, these are the kind of people I'll invite to my house. But do you know how difficult it is to find these guys? Most contractors out there, man, dude, if you show up on time, you're ahead of the game.
Yeah.
It's crazy. So the heartache involved with going through contractors right and left, and when you're doing a lot of flipping, you got to have several teams accessible so that somebody can't make it go somebody else. Oh my God, I don't want that life. You couldn't pay me enough.
Yeah, no, that's why I hired that contractor to take over, because it was so much work just managing the contractors. And if you're not on them every week or a few times a week, then they go off doing the other jobs, doing their own thing. They forget about you, and it's crazy.
Yeah.
So, but I'm impressed. I mean, you went through some really crazy bad experiences, but you kept going. I mean, you decided not to flip, but you still stayed in the real estate game, and you decided to just take a different route. I mean, what kept you going and kept you in the business after going through all those problems?
Well, I hate to fail. That's for one thing. So that kind of didn't bode well with me. Secondly, I assumed the liability for not knowing enough, and I just figured, if I knew more, the result would be different. And thirdly, it just defined to me what to do and what not to do. And I think what not to do is to count your eggs. In other words, to go for the profit. I make sure I don't lose. This is like what I do now is when I underwrite a deal, I underwrite it so that I don't lose first. And then I worry about making money. And that's what's kept me safe. And that's what's kept me making money is because, if you don't lose, play good defense. I think winning is also a function of the marketplace, and you just don't know. Like the flip that I lost $20,000 on, that was a $120,000 house. But by the time I sold it for $110,000. The market started to change, and we were barely 2 or 3 months into that down cycle that we all hopefully remember well from 2007, 2008. We were just at the beginning, but it was enough to where the market started to dip. And the problem with that deal is I couldn't rent it. I couldn't rent it and cash flow it because it was a wrong kind of asset. It was an older house, and I fixed it, but it wasn't conducive to tenant proofing it. There were a lot of things in that house I could not rent. And I also couldn't rent it for enough to really cash flow it after CapEx and vacancy and all those expenses. So I was stuck. I was stuck with a product that needed to be moved. So I don't do that anymore. I don't buy anything that requires me to sell, and that's the only way to make money. So now when I do a syndicated deal, I want to sell it 5 years from now, but if I can't, we'll just cash flow it. I underwrite the cash flow. And maybe the IRR suffers because we can't sell on a timely fashion because, everything's time sensitive. But at least we can cash flow. At least we're not going to be stuck. And so it just taught me a lot, that experience. And based on that, I just moved on. I never lost faith that real estate had the key to financial success, some kind of stability that I couldn't achieve with W-2. I realized that I needed passive cash flow. And if it wasn't starting businesses, then it had to be real estate. And at the time, I was a musician. I didn't know much about starting businesses. I couldn't do that. And so real estate by default had to be the solution. Right. I just made it work.
I love the fact about cash flow. I hear so many people who, they either had a personal residence or a flip that doesn't work out right, and they end up renting it out, are making negative cash flow, renting it out, hoping for the market to turn at some unknown point in the future. And like you said, if they don't think about how much money they're losing while they're waiting for the market to turn, and then there's no guarantee that the market will ever turn, and then there's selling costs once the market turns as well. So it's this ongoing process of just negative cash flow. It's going to make the situation so much worse. And like you did, if you just get out, take your losses, and move on, you'll probably be so much better off.
Absolutely.
Now, how many units do you have now as far as rental properties?
27 in my own portfolio.
I mean, you manage all your properties still?
I have opportunities to buy more. I just don't.
Right.
Again, because it goes back to that conversation. I have very clearly defined in my mind what I want. And if it doesn't fit, I'm not going to buy it. I don't care if it makes a little cash flow. What the hell do I need more cash flow for? Okay, so it's another $400 of cash flow. What? Am I going to sleep better because of it? I have very different goals in life at this point. And I understand real estate very, very well. And so if something comes across my radar that really makes a lot of sense and fits into my business plan, great. I'll take action on it. If not, it may still make sense. It just doesn't make sense for me. It may make sense for somebody else.
When you bought your properties, though, you didn't just go out to the MLS, buy what was ever there, and put 20% down. I mean, you worked your butt off to buy those properties, right, and to put as little of your own money into them as you can. I mean, tell us how you did that and how long it took you to get those deals done.
Well, I've been at this since 2006. I bought my first multifamily in 2006. I'm at 27 properties, and I sold something recently here because it wasn't making sense to hold it, so I sold it. Okay, but I average. Last time I bought something was about 2 years ago in February of 2013. It was a big project. It took me. It's stable now. I have my first vacancy in about 9 months in that project today. It took me a year and a half to reposition. It was a 10-unit building, and it took me a year and a half to reposition it. So, one bird at a time. You shoot, you kill, you skin, you cook. I can't handle any more moving parts than that. And this was a tough one. I mean, it had all of the classic problems of everything that could be wrong with a multifamily building that needed to be fixed. Everything was there. So it was a lot of work. So it took me a year and a half. And I've been looking at things for about 6-9 months, and I've been underwriting things. I just not seen anything that qualifies. But even prior to this, it was usually one deal a year. Is pretty much my MO, one deal a year. Things don't come up that are worthwhile. And most of my stuff is word of mouth. So most of my stuff is not MLS stuff. The financing is a whole another thing because, like you said, I finance 100% everything I do. So there's always some kind of blend of private capital and institutional money in there. But to me, it usually doesn't cost either anything or very, very little.
I have 13 rental properties now. All of mine are single family, except for one that's an up-down duplex. And I'd say it's closer to a single family than a multifamily the way it's set up. Why did you choose multifamily over single family? Was it your market? Was it the aspects of the properties, the management part of it? What attracted you to multifamily?
Well, many things. How much time you got?
We've got some time. No.
Yeah, that's right. We'll be here till tomorrow morning. So in very general terms, I like diversification of revenue streams. So if I am going to have an asset, I would rather it make a few revenue streams as opposed to just one. Because a house, ultimately, if there's a tenant in there, then it cash flows. If there's no tenant in there, then it doesn't cash flow. Now, the big issue is that I'm in Lima, Ohio, and aside for cash flow, I want to build wealth, which is a function of equity and it's a function of balance sheet. The multifamily, as you know, valuation mechanics are generally capitalized valuation of the net operating income. Single family, to figure out what it's worth, you simply do a comparative market analysis. So it's got nothing to do with the income. So for somebody who wants to build wealth, who wants to build their balance sheet, if you are in a marketplace whereby single families are appreciating in value and multifamilies maybe are not, then what you buy is single families. If you're in a marketplace like mine, where single families never go anywhere, they just never go anywhere. Then if I buy single families, then my balance sheet is never going to grow. In multifamily, however, what we have is something called forced appreciation. Because the value of a multifamily is a function of its income. If I can grow the income of a multifamily, I can back in to the increased valuation. It's a mechanical process that I have a lot of control over, as opposed to in single family, it's just what did this house to the right sell for and what did this house to the left sell for, and now let's make adjustments to those valuations to configure my house and see what it's worth. That's strictly driven. Now, in multifamily, your capitalization rates and GRMs are driven by the marketplace, but those are based on something. That something is net operating income, which is a function of income on the one side and expenses on the other. So if I can hike the income and lower the expenses, I can create the spread, which is going to valuate in additional equity on the balance sheet. So in that, I preach about cash flow, and I think cash flow is king. I think cash flow is king. Logic only goes so far, because what it does, cash flow, is it helps us to hold on to our assets long enough for them to appreciate in value so that we can build wealth and we can retire and pass on our wealth to our children. Okay, that's the ultimate goal. Well, you can buy assets that cash flow but don't build wealth. You can buy assets that the marketplace has decided this is a piece of shit and it's never going to be worth any more than what you are paying for it. You can. It's easy to buy those kinds of assets. I don't want those kinds of assets, but unfortunately in my marketplace, those assets are single family homes. Now, the only other problem I would mention with the single family homes is that they also don't cash flow. So they're a double threat in my marketplace, because you see a lot of stuff, I call them pigs, $30,000 houses people buy. You see a lot of California money coming out to Ohio, a bunch of places, Cleveland, Toledo, Cincinnati, buying those pigs. A pig's a pig for a reason. Once it's a pig, the marketplace has decided that it's a pig. There's a reason why the marketplace has decided that there's functional obsolescence and financial obsolescence involved. It's a pig. So, you're not getting any value out of it on your balance sheet, which means the only thing you're getting is the cash flow. Well, are you? Because then you have to wonder who's going to live there. How reliable a tenant are they if they're willing to live in a pig? Do you see what I'm saying? I mean, that's the logic. Who is this project going to attract? And what about CapEx? You're talking about an old house that needs everything. Are you really going to gut it and replace the wiring and replace the roof and replace the windows and a lot? Are you going to do all that? Why would you? That's like throwing good money after bad, right? Because if the market says this thing's only worth $45,000, but it needs $35,000 in order to bring it to anywhere near a reasonably good condition, and you're paying $23,000 for it, are you really going to do it? And right. Then you have even worse problems with turnkey, because those guys have to make their money on the sale, right? So by the time you add that margin in, but I think I'm slowly walking away from your question onto a different tangent. But Ohio is a difficult market. It is a difficult market because you don't particularly have great job growth. It's the Midwest. It's not just Ohio. It's not just Lima, or it's not just Cleveland or Cincinnati or Columbus. Yeah, there are pockets that are very good. But by and large, you're talking Kentucky, Indiana, Michigan, Ohio. People are generally moving out. They're not coming here. It's not the sunny weather. It's not the high-tech industry. It's not oil. So it's a difficult market. So you have to be very, very careful, because demand drives appreciation. Demand for rentals and demand for houses. That's what drives appreciation. And if you ultimately don't have that demand, then you have to get above average deals. And a lot of what I see going on out there right now would barely qualify for average. Forget about above average. And I only do one deal a year because I want above average deals. I have to. If I lived in San Francisco, I could buy a freaking shack and sit on it for 7 or 8 years. Hell, even if I only lived where you live in Colorado. By the way, I spent a lot of years, summers in Colorado, in Aspen. I was a fellow at the Aspen Festival. Back in my violin playing day. Would like to go sometime. Great memories there. But, someplace, San Francisco, Hawaii, landlocked, all you got to do is buy a piece of land. That's all you've got to do. And just sit on it. And that mitigates a lot of the problems and a lot of the mistakes and a lot of the miscalculations, cash flow wise, and, a lot of problems. But in Ohio, we don't have it. So you better be damn well sure what your exit is going to look like, what the time frame between here and there is going to look like. You better understand the dynamics of what it's like to have a house rented. What does that mean? You better anticipate the expenses before you come across them. It's very, very difficult. It's not pro forma.
No, I'm glad you said that. We went off on a little bit of a tangent, but my whole point, people trying to argue multifamily versus single family, what's better, lower priced, higher priced houses. And my answer is always, well, it depends. I mean, where's your market? What's your market look like? What houses can you buy? Can you buy them at a discount? What's the cash flow look like? It's all different where everybody is. And for you, it's a completely different market than for me. You mentioned Colorado, the highest appreciating market in the country right now. I mean, we're higher than California right now. It's crazy. Our prices went up 15% in the last 4 months. So it's just insane. And so very, very different in very different marketplaces.
But I'll tell you, I would rather be where you are, paying top dollar for quality assets that are going to appreciate. Because, I underwrite to IRR. I don't underwrite. Cap rate doesn't even enter it does enter my thinking, but it's not in the way that you think. Not the cash on cash. I underwrite the IRR, which means I project the entire lifespan of the investment, which means I underwrite the exit. Well, I would rather be looking at exits in a highly appreciating market like you. I could afford to pay a 6 cap for an apartment building and still make a whole lot more money faster, quite potentially, than what I do in Lima or anywhere in the Midwest. Simply because if people want to be there enough so that they're driving up costs to such an extent, I want to be there. I want to provide to the marketplace that which many people want. And people want to live in Colorado and work in Colorado. So I want to give that to them. But I'm stuck here. I don't believe in long-term investing on small scale. That's one of the reasons I look at big 100, 150 unit projects right now, is because I can underwrite management. I can underwrite payroll as part of my operating structure, which means that I can expand my footprint. I can go to different areas, and I have to manage the managers, but I don't have to be on the ground managing the tenants. And that's what I'm trying to get away from.
Makes sense. Makes a lot of sense. I'd rather be in Colorado too, just in case you're wondering. But you can always move, Ben.
I'm thinking about coming to visit you guys this summer, actually.
Oh yeah, come out here. We'll take care of you.
I'm afraid to ask what that means.
It'll be a lot of fun.
I think we'll have fun.
I love it. So we talked about your properties, how you got started. I mean, you've kind of evolved from flipping to rental properties, and then you started just askbenwhy.com.
Mm-hmm.
So tell me why you started that site, what it's been like, and what it's done for yourself and your business.
Well, I started it because a lot of people were asking me what I do and how I do it, right? So I'm a musician. And a lot of people in this world still see me that way, right? I don't play. And when I do play, I typically don't even ask for money. I only do it because, at heart, I'm still a musician. I love the violin. It's who I am. It's just not what I am. It's who I am, right? But a lot of people were looking and just kind of going, what's going on here? I mean, it's Ben's doing something. So that's why I started it. I started just Ask Ben Why. I thought, maybe I can monetize it. Maybe I can do something with it to create another revenue stream. I mean, I'm not going to blow sunshine up yours. I like passive cash flow. It is what it is. I like it. I think it's necessary. I teach everybody to get an idea, to become really good at something, and to monetize it 10 different ways, every way that you can, because you have to. I mean, you have to be safe. What happens to my family if I get taken out by MS, or if I get run over by a car, or whatever? I would hope I have several revenue streams that they can lean on, and I would hope that those revenue streams are passive and stable. And that very much involves real estate. And it also involves Just Ask Ben Why. So I started Just Ask Ben Why just to tell people how I do what I do, creative finance, how to help my old classmates, some of whom I've been spending hours and hours on the phone, and some of them own property now, and just in general, people are reaching out. And I set up Just Ask Ben Why. And I set it up initially as a podcast type thing before the podcast was sexy. I set it up as a podcast, and it went nowhere. It went nowhere 3 years ago because nobody knew me. So why should it go anywhere, right? So then I said, okay, this is when my kids were maybe 2 years old. They're 6 now. My kids were 2 years old, and I'm in the basement at my house at night. We're talking 3 a.m., 4 a.m. And I said, listen, I am not going to be continuing to do this thing, asking people to pay $20 or $30 or whatever, hoping that somebody comes to listen. What I'm going to do is I'm going to create this product that takes people from point A to point B, that explains to them my methodology, the way I see real estate, the way I view real estate, top to bottom. At least on the initial level, not the very sophisticated syndication stuff and things like that. But how do you go from having no real estate? What do you need to know to have then a duplex, a fourplex, have a few units? What do you need to look for? How do you analyze it? How you underwrite it? How do you value how much to pay? All that kind of stuff. What do you buy? What do you not buy? How do you manage tenants? All of that kind of thing. So I created this package. I sat there in the basement in my house when everybody was sleeping, and I dictated my thoughts into the computer, and then I wrote a PDF to go along with that, and I created a little software to analyze property. So I thought, I don't know if anybody's ever going to find it. Anybody's ever going to want to listen to anything I have to say, except for that I'm somewhere. I've definitely made progress. I am a guy who graduated from Cincinnati Conservatory as a violinist, was told I have multiple sclerosis. I can't have a performing career because of it. And now I've got these units, and they're cash flowing, and I've got a balance sheet, and I've got a little bit of net worth, and I've got, I've lowered my tax liability because, of real estate. And I've done these things. This was real back, 3 or 4 years ago. I mean, it's a lot better now, but even back then, it was very real. I said, a lot of people out there struggle, flat out, just struggle. And a lot of people out there are just like me. You'd be surprised how many people reach out and say, I've been in an accident, or I had a heart attack. So I understand, I can relate to you on that level. So I created this package, and I said, look, if people want to purchase it, okay, they should purchase it. And if people don't want to purchase it, okay, I wasted my time. So, I created it, I put it online, and that's CFFU. And it's basically been unchanged. The same product I've had for 3 years. It's there. It's just a course. It's about 20 hours of me talking, telling people what to do and what not to do, why and how. And people have been buying, and people have been very, very, very positive. Well, you've gone through the entire thing,
Yeah.
So I think it's good stuff. I think it's really good stuff. And I think that anybody that's interested in real estate, it's a cheap price to pay for education. Because remember, I lost money. I lost real money. So rather than going through that, I think it's a very cheap way to educate yourself.
Yeah, you had a very expensive education. You can just think of it that way.
That's
$20,000 education.
$20,000 lesson. That's right.
Yeah. No, I went through. Yeah, I listened to all your recordings, and it was really good stuff. It's interesting because I have a completely different way I invested. I was putting 20% down, buying single family homes, and you go through how you bought multifamily properties without using your own money, using private money, how you structured the deals, and then also how you found them too, which is, if you buy a property off MLS, especially multifamily, I mean, you're going to pay a lot more money than if you're using word of mouth, no real estate agents, off market properties.
And the essence of
I also have a huge advantage because I'm a full-time agent, so I can get better deals than most people.
Sure, but you are still competing because everybody, you're not the only one who knows about the property. So the reason I've been able to get the deals that I've been able to get is because nobody else knew about them. They weren't marketed. So that's a good circumstance to start your negotiation from, good starting point. And I don't know that I've gotten steals, I've gotten fair deals, but at least I was able to be face to face with sellers, and we were able to, okay, here's your problem. Here's my problem. How can we solve to both of our satisfaction? Which isn't something you can do in the MLS. It's just not how business runs in the MLS. So
Right.
I'm a big proponent. Of course, I'm finding it really difficult now in the syndication space because it's so hot. Everything goes through the brokers, it seems like. And that's one of the things I'm really struggling with is because, I structure deals. I create solutions. That's the essence of real estate to me. And if I can't have access to the seller to figure out what the issue is and how we can be creative about putting this deal together so you get what you need to get, but I still have some meat on the bone. If all you are telling me is that I want $6.5 million for 120 units, well, great. Okay. What do I do with that?
Right. Now, real quick, explain what syndication is to those who don't know what it is.
So syndication is essentially just pooling capital together from multiple sources or entities in order to facilitate acquisition of larger projects. You can look at syndication like a simple partnership. A partnership whereby you bring $20,000 to the deal, I bring $20,000 to the deal, Justin brings $20,000 to the deal. We use $60,000 for a down payment, and we get a loan for the rest. So that's basically the act of syndicating. Okay, it's you're syndicating capital. Now, when we talk about syndication, though, we generally mean a limited partnership. And there's a difference, substantive differences between what is a partnership that's a democracy, such as an LLC, where everybody gets a vote, and a partnership that's a limited partnership, where you have the general partner who runs the show and the limited partners who are just there as money partners. Well, the issue is that since limited partners don't have any control over how the investment runs, SEC kind of regulates that. Because people are just along for the ride. They don't have that control. Okay, so you are the guy in control. You as a syndicator, general partner. So it has to be done very properly with SEC attorneys, and usually it's Reg D 506 that's used as a vehicle to accomplish this. But essentially, it's a limited partnership. But what we do is we find in my case, apartment buildings. You can do it with any other asset class. But in my case, I look for apartment buildings, $1 million deals that are way too big for me to try to do on my own. And I pull in partners to, come up with the down payment. And then I'm the managing partner. I manage the process. I most of the time have to sign on the loan because there's recourse to me. There's no recourse to limited partners. And I have to, worry about refinances. If there's refinances as part of the business plan, I have to structure the exit, at the time of the exit. So, you manage it like any other investment you would manage, but you also have limited partners for whom you are generating return. That's the essence of syndication.
You've been working on this for a while now, and like you said, it's a really tough market now to find those big deals. I think because there's so much big money, so much big cash, coming into real estate right now, not just from the US, but from other countries too. Just looking
Right. And their agenda is preservation of capital. A lot of players out there aren't even interested in getting returns. They just want to preserve their capital. You have a lot of instability in emerging markets that want to come to US. You have a stock market that's flying high. And a lot of people are not trusting it going forward. They want to pull out and they want to get some yield to protect their investment. And this kind of apartments seem to make a lot of sense because generally speaking, population grows and you don't have any more land than what you have. And so on a macro thinking scale, it makes sense. And so right now, a guy like me who needs to generate a preferred rate of return to his investors and 16, 17% IRR on a 5 or a 10-year hold, a guy like me, when somebody else isn't even underwriting to IRR, they're just getting Fannie Mae paper at 4%, non-recourse for 10 years fixed, they'll buy at 7.5 cap all day long. Because guess what? They have that delta. Their debt is 4%. They figure if they're buying at 7.5 cap, now I'll tell you that cap is fictitious. It's not real. It's never going to happen because most people out there don't know how to underwrite deals. But that's what they're thinking, and I have to compete with that. That's a tough proposition. I'm still trying.
Yep. All right. Well, we're getting close to running out of time, but tell me, in the next year, what would be the perfect situation for you as far as your business? Would it be your website continuing to succeed? Would it be finding syndication deals? What would you love to see happen?
I think it's both. I'm a musician, so I'm kind of artsy fartsy in a lot of ways. And ADD, I just have to have my hand in more than one pile of something, rather, in order to feel satisfied, emotionally. So that's why I work on several things all at once. My website doing well, I think, is wonderful. First of all, I'm helping people. And secondly, I'm making money. And I'm making money asking people to pay at a price point which is so reasonable considering education in this space. I mean, you could spend $20,000, $30,000, $40,000 on this education. I'm asking for a few $100. I mean, it's not cheap, but I can feel good about the value I'm delivering. And I do feel good. And then people respond positively. So I feel very good about CFFU, and I want it to continue to grow. For my own personal growth, I want syndications. I want big apartment buildings. It's just a natural outcome of me growing as an individual, as an investor, as a businessman. I want those things. And so I still go after those things. I think there's opportunities out there, but they're very difficult to find. And I have to figure out how to position myself so that these opportunities come to me as opposed to somebody else, which is a difficult proposition. I'm selling myself, but that's what these people do. We sell ourselves, So both. I couldn't tell you one or the other. I'm interested in both, and I work actively pursuing both.
Well, you'll get one here soon, a syndication, I think so.
I hope so. I hope so.
And I know your site's doing great, so I wish you continued success on that. Now, if people want to get a hold of you, what's the best way? Is it going to just askbenwhy.com or email? Tell us how to talk to you.
I have an email account, ben@justaskbenwhy.com. I have the email on my website, www.justaskbenwhy.com. I have, as you mentioned, a very large presence on biggerpockets.com. And also I have large presence on your site, actually. So I think there are a couple of articles that you've written that you've included me into that I see people reading all the time on your site. So if somebody wants to get a hold of me, they should just ask you.
Right. Yep. And we'll include a link to your site and some of those articles as well on the podcast notes. So we'll make sure people can get a hold of you however they want to. So Ben, I want to thank you very much for taking time out to do the podcast, to enlighten us with all your information. in history, from flipping to rental properties to syndication. Great show, great job, and thank you very much.
Mark, thanks for having me.